Is the Bitcoin 4-year cycle a relic of history? Are we entering into a new era where the bull bear cycles, the beating heart of the cryptocurrency market cycles, is no longer determined by the Bitcoin halving? Are we entering into a new era? Well, one famous investor seems to think that is exactly the case. Also, in today's news, billionaire Bitcoin lover Bill Miller talks about why Bitcoin is less risky now than it was a few years ago. And a quick word on the US debt ceiling and the conversation around printing a $1 trillion platinum coin. My name's Lark. Every day I make videos talking about cryptocurrency investing, so if that's a topic you'd like to learn some more about, maybe just stay up to date with, make sure you subscribe to the Lark Davis channel. Also, if you take a quick second to tap on that thumbs up button, just for the YouTube algorithm, that would be super, super awesome. And of course, if you want to know when I put out a video, make sure to click on that notification bell. By the way, if you want to earn a safe and simple passive income, you need to get yourself an account over on Celsius. You can earn 6.2% on your Bitcoin, 5.35% on your Ethereum, and 8.88% on your US dollar stable coins. Use the promo code LARK or the referral code down below in the description after clicking on that link, and you will get a $50 Bitcoin bonus. Now let's go ahead and dive into the charts here. So Bitcoin had a nice day yesterday. We rallied up from $54,500 to almost $58,000. Nice. However, we have just run into a key area of price resistance. You can see right here, we had that price resistance acting as well as right here. So this is a pretty key area for Bitcoin to potentially take a breather. Maybe we'll see things calm down here a little bit. We've had a pretty incredible run over the past few weeks, to be honest. I mean, look at this. Look at this. We were down at $40,000 back on the 29th of September. Now we have rallied all the way up almost $20,000 more, almost up 50% from just 2 weeks ago. Bitcoin has been on quite the rally. If we were to stop here, then we'd of course look for a slight pullback to come into play. Key areas to watch if that were to happen would be $52,500 as well as $50,000. So those would be the two areas I'd be looking to buy on any pullbacks that we may get. Now, if we conquer $58,000 here, then of course the next big area of resistance for Bitcoin we see playing out here and here is at $60,000. Now, if we crack $60,000, game on, man. Game on. Now we've got to close a daily candle above $60,000 with some convincing volume to back it up. That's the caveat. If we do that, then the new all-time high could come very, very, very quickly, because at that point, there are very, very few people who bought Bitcoin in this area. Oh, sure, a few people did, and maybe they're just desperately waiting to sell their bags the second it gets back to $65,000. But more likely than not, that's going to be clear air above us. We're going to see Bitcoin move potentially quite fast once we do break $60,000. But don't get too excited until we break 60K. I know the price action over the last 2 weeks has been freaking amazing. I love it. I really, really do. But be aware, pullbacks are normal, pullbacks are healthy. Retesting previous areas of resistance, flipping those into support, it's a normal thing to happen. Until we break above 60K, or of course fall below 50K, we're really just ranging here. I know it's been a lot of strong upward movement, but until we decisively crack over 60K, I would expect some ranging to happen within this area. So we'll see. Bitcoin's been very bullish recently. We could see that continuing, but I just want you to be aware of where you might want to place some buy orders in at $52,500 and at $50,000 if we do get those retraces coming in. And of course, if you're looking for a long to make, wait until we crack over $60,000, close a daily candle above it with some convincing volume. Now, this is a chart I wanted to share with you here. It's from Charts BTC over on Twitter. He said, what if we realigned the x-axis to line up with December 13, December 2017, and December 2021? Essentially, looking at what has happened in December's, where we get these massive, massive freaking rallies. So the white line is, of course, our current market cycle that we have been going through. That would indicate that we could still see December being a pretty damn incredible month for the cryptocurrency markets. Remember, we're not going to go in a straight line to that. It never does go in a straight line. There'll be pullbacks. It'll be messy. It'll be exciting. But we can still see that $100,000 Bitcoin coming by the end of the year. I remain a believer in the cause. I will buy dips on the way to that goal. Here is just another bit of information for you too around the Bitcoin futures open interest. Now this, to my mind, would say that we are getting close to a scenario. We've run into resistance of 58K, 60K, of course, also key resistance. What happens when the market starts running? What do we see? Every time what we see is people getting overly bullish as we start hitting into areas of resistance. The open interest on the futures exchanges skyrockets. So what are we seeing now? The open interest is skyrocketing once again. So that means people are longing the market like crazy. So what happens when that happens is often these massive spikes of open interest come just before a correction. We can see here, massive spike of interest, correction. Massive spike of interest, correction. Massive spike of interest, everybody longing the top, longing resistance, correction. Everybody longing the top, correction. Everybody longing the top, correction. Now you have to understand though, just one very important thing to take in mind here is that that could continue to build up before we see a blow-off peak, right? This is not the highest level of open interest we have seen. We've seen 1, 2, 3, 4 higher levels. So this is the 5th highest level of open interest that we've seen, counting, of course, just the peaks. We could see this leveling up like we saw here, 1 level, 2 levels, 3 levels before we actually see the big correction start to come into the market here. But that growing level of open interest is a warning signal, basically. It's saying that, hey, people are getting overly bullish as we're coming into resistance. People are getting overly bullish as we're hitting these key areas of resistance. Usually, that creates a long squeeze where the longs are punished, the shorters are rewarded because the shorters, of course, the minority in the market right now. The whales will play the games, guys. You know how the whales play the games. They'll wash a lot of longs out here. And not to say that Bitcoin doesn't crack 58 and crack 60 and just smash onto a new all-time high before you know it. But that rise in open interest does tend to be a canary in the coal mine kind of situation. Next, let's get into the news. Billionaire investor Bill Miller. Bitcoin is a lot less risky today. Well, not today. He said this a few weeks ago, obviously, at $43,000 than it was at $300. Basically, that Bitcoin has made it. Bitcoin is an asset that's no longer super speculative and risky. Bitcoin's a safe asset. Bitcoin, it's an asset that people can feel comfortable putting hundreds of millions or billions of dollars into, which is exactly what we've seen funds doing, exactly what we've seen people like Bill Miller doing. I wonder how much Bitcoin this guy has. Probably a couple hundred million, maybe 100 million. I bet it's a lot. I bet it's a lot of Bitcoin. And this guy's been bullish on Bitcoin, by the way, since back before we started entering into price discovery for this bull market, right? He's been on the Bitcoin train for a while, Bill Miller. He's probably got a pretty damn good stack. He also said Bitcoin is now an established asset. Huge amounts of venture capital money have gone into it. All of the big banks are getting involved. He's absolutely right. He's absolutely right. This is what the billionaire investors, the hedge funds, the companies, the private funds, all these guys are looking at. If you want to get into a crypto asset, you're not going down to number 400 on CoinGecko and saying, well, that's the asset we want to invest a bunch of money in. This stuff is mega, mega speculative. You have to understand. Even Bitcoin remains quite volatile, but Bitcoin has made it. Ethereum too. Ethereum has made it. In spite of the crazy on-chain fees right now, Ethereum is a pretty damn established asset. But Bitcoin, for a lot of these funds and investors, it's digital gold. It's digital gold. They're buying it on the same basis that they would buy gold, for the same reasons that they would buy gold, except, of course, that it is valued at 1/10 the price of gold by market cap. So, Very interesting. Bill Miller, of course, has been a big Bitcoin bull for a long time. Nice to see him still being a big Bitcoin bull. Now let's get into the main story of today. Bitcoin's wild volatility to be a thing of our primordial past. This is from Dan Morehead, the CEO of Pantera Capital. He says, the 4-year crypto cycles are done. History will no longer repeat itself. That's a pretty big call. It's a pretty big call. And we've discussed that idea here on the channel before, but I want to dive into it a little bit more because he's brought it up, and I think it's just an interesting thing to talk about. So he said the first halving reduced the supply of new Bitcoin by 15% of the total outstanding Bitcoin. That's a huge impact on new supply, and it had a huge impact on price. Each subsequent halving's impact on price will likely taper off in importance as the ratio of reduction in the supply of new Bitcoins from previous halvings to the next decreases. He suggested as well that as cryptocurrency markets mature and the space sees more institutional adoption, volatility will decrease. Deep bear markets, such as minus 83% corrections, are a thing of the past. Now that's very, very interesting. This theory that the Bitcoin 4-year cycles are over. Now this comes back to our super cycle theory, the idea that the market's just going to keep going. Yes, there will be bear trends within that. Yes, we'll have bear markets within that. But the bear markets of the future in crypto are going to be nothing like the bear markets of the past. And where can we find an interesting parallel for how that could be playing out? Well, tech stocks. If you go back and look at Apple, Amazon, Microsoft, all the big tech stocks back in the 90s, all of their early days of trading, oh man, that was some volatility. You guys know Amazon went down by like 95 or 97% after the dot-com bust? Incredible. And then it rose from the ashes, and its next correction brought it down by like 65 or 70%. But over time, the corrections for Amazon and Apple and all these other big tech stocks, they've got a lot less. Now they come down 30, 40%, and that's it. That'll mark the bottom of a bear market for these assets. They don't do minus 90% corrections anymore. They don't do minus 80 or minus 70%. Only in the most extreme circumstances will you see 50 or 60% corrections in any of these tech stocks. I think that crypto is going in the same direction, that when we do see our next bear market is going to be nothing like the previous bear market. We've seen the big money coming in. We've seen the impact of Bitcoin halvings being reduced by the surge in the quantity and quality of altcoins. We've seen the game just changing with the big money guys and their new strategies they're bringing in. We have all this DeFi stuff that really you never have to leave. You don't have to leave anymore. You don't have to cash out, take money into your bank account, and wait. You can take your money, put it in DeFi, do stuff with it. Changes the game completely. So because of this, we could see our super cycle event starting to take off where, yes, again, there are corrections, there's bear markets, there's bear trends, there's all that kind of stuff happening. But none of it's like what we saw in 2018. None of it's like what we saw in 2014. The days of super mega brutal corrections could be over. And with that, the impact of the 4-year cycles in the market. Now, currently, I must say, by the way, it's looking like our 4-year cycle's playing out pretty much to a T, but it'll be curious to see what happens afterwards if we are able to get a $200,000 Bitcoin, see the price retrace by 40, 50%, and the market's not implode and us go into the barren wastelands of Bearville for a couple of years. Well, then that's the super cycle. That's the super cycle. And I really think that's more of the direction that we're heading in, even if we get this sort of maybe final 4-year cycle. Maybe this is the last 4-year cycle. And it'll play out up to the top as if a previous 4-year cycle, but the bottom will be much different. The bear market will be much different because Bitcoin is no longer the only game in town. Final story for today, just quickly, U.S. debt ceiling crisis, a catalyst for crypto's ultimate decoupling. The U.S. national debt It's insane. They're raising the debt ceiling again. I mean, imagine that if you could just raise your own credit card limit and just keep spending. Just keep spending. You never have to pay it off. You just keep raising the limit on your credit card forever. And you never have to pay back that money. That's crazy, man. That's exactly what the US government does. Well, they're back to one of those situations that they run into like once a year where they have to raise the debt ceiling, basically give themselves a bit more limit on their credit card. Usually a bit of kerfuffle around it, but not such a big deal. This time, I guess the Republicans are making a big stand against the Democrats on it and threatening to shut the government down. And I'm sure at the final hour, it's all going to get passed. Everything will be fine. If it doesn't, everything will still be fine. Not a big deal. But here's an interesting thing that has come out of this conversation. The $1 trillion platinum coin. Now look, I don't think the $1 trillion coin is going to happen. But just the fact that they're talking about minting a $1 trillion coin makes you realize that the central bankers are all clowns. The global economy, it's the clown car, and they are all mega addicted to free money. All their corporate buddies, all their banker buddies, the central bankers themselves, they gotta keep getting a hit of that sweet, sweet inflation, that sweet, sweet free money. The fact that they could contemplate making a $1 trillion coin. A $1 trillion coin. Money means nothing. Fiat currencies, every single one of them is going to zero. Every single one. It's only a question of when. Some are going there faster than others, the Lebanese and the Argentinian and the Nigerian and the Sudanese and other fiat currencies. Oh, they're going there very, very quickly. Other stronger currencies, the pound, the euro, the dollar, because of their economic importance, they are on a slower trip to the dustbin of history. But they're still going there. They're still going there, which is why, of course, you just keep on buying Bitcoin, guys, because the insanity going on right now in the global financial macro scene, it's nuts. It's nuts. The people in charge are all crazy people. They're all crazy. Save yourself. Opt out. Buy Bitcoin. That's the simple message. Anyway, your question for today. Do you agree with Dan Moorhead of Pantera Capital that the 4-year cycles are coming to an end? It's not going to be the same moving forward. We're entering a super cycle. This time is different. Or do you think, no, you know what? The 4-year cycle, it's just going to keep on repeating and repeating and repeating and repeating. That is the way the crypto markets work right now. Curious to hear your thoughts down below in the comment section. Thanks so much for watching today's video, and peace out till next time.